Happy 4th of July, everybody. It is bull tide. We're practice trading on Gobi. If you're going to trade perpetuals or futures or any instrument for that matter, you should always practice first virtual money. We're going to look at Bitcoin and then BONK. So Bitcoin, we were looking at the daily chart. We were entering what was expected to be a multi-day to a week position. We're looking at the support, hoping the support becomes resistance. It is holding up and we'll see how that goes. So we'll stay in that position, expecting that to form a downward trend. If we look at BONK, a little bit up on BONK. We're looking at a shorter time window here. So let's look at the analysis, 1 hour. I drew these lines out. This looks like a bullish pendant. Navigating here, the expectation of this forming is that this would sort of continue to go upwards after it forms that triangle. So this doesn't look in very good for us. Fortunately, we're a little bit up on BONK right now, so we can get out without losing our launch. This is a good thing about keeping an eye on it. So I'm just going to exit this position. And actually, let's go ahead and reverse the position. We see this as becoming bullish pendant. Okay, so we're going up. It's hard to tell where this is going to go, but we can at least put a stop loss here. I think if we expect this to be a bullish pendant, we would expect it not to go much farther down below this support right here. That's about 0.48 cents. However, if we look at the average range of the candles, it's about 0.01. We would take this down to 0.47, and that would account for the possibility of wicking in any direction. Let's put a stop loss at 0.47. If it goes below this, we're out, and see if this continues its upward trend. So let's see if there's anything else that is worth looking at today. If we go to hot markets, zero is doing something interesting. It says thin markets. This seems to be forming a pretty clear downward trend. If we look at this, there's a little bit of a support there. It might hit this support, but we actually have a little bit of volume here. There's a little bit of volume here, and here, but not that much. It's really tricky. This could be pretty volatile. I would say that this is fairly bearish. The average candle wick sizes is, let's see, around 0.12. So if we take the current price, which is about where this old support become resistances, and you go up 1.2, so we're at 0.91, so we should go to 1.03. We could put a stop loss there, anticipate it keeps going down. So let's do 1.03, put a stop loss. We're gonna short it and anticipate it keeps going down. We'll keep an eye on this. If the behavior changes substantially, we can get out, but I think that'll hold us over. What do we lose? $300, so we should reduce our exposure down to 100, and no take profit for this. Let's review this, place this order. Go back home. What else is interesting? Take a quick peek at hamster combat. Seems like there is a long squeeze. Wow, there's a huge spike up. Goes back down. It's not looking good. It jumped up, now it's spiking down. I would say, okay, this is the peak. The candle range is about 0.1, so let's just put a limit at about 5 and just see if it continues going down. It'll be worth having a position at all. So if we're looking at that, we're risking $200, 50. Okay, seems close enough. Let's review this, place this order, and we'll see. So we're in 4 positions now. We're just gonna see how it plays out over the next day. Inch by inch, we're gonna get there. Have a great 4th of July.